Good day, everyone, and welcome to the Sunday's Weekly Outlook video newsletter for the upcoming week, which is August 18, 2013. Looks like summer is almost over. Let's take a look and see what the markets have in store for us for the next week. Investors and traders will be looking ahead to Wednesday's minutes of the Federal Reserve's most recent meeting, while U.S. data on initial jobless claims and the housing sector will also be closely watched this week. There's very little market-moving news that's scheduled to be released from the public sector, so much of the first half of the week is going to be focused on pre-existing issues such as violence in Egypt, anticipation of Feds cutting the stimuli program, and the last of the earnings. Let's start off with the broad market. Right now, the S&P is sitting at the 50-day moving average and is below the 20-day moving average. The 20-day moving average is not used very much by large funds or institutions and is primarily used by short-term traders and scalpers. These players do not influence the overall direction of the market, so the fact that we're trading below the 20-day average doesn't bother me too much. What does bother me is the fact that we're sitting at the 50-day moving average. The 50-day moving average is used by hedge funds and large institutions as a gauge of market strength and weakness, and many funds begin liquidating positions when they trade below the 50-day moving average. It'll be interesting to see if we can bounce up from these levels, at least during the first part of the week. The last factor we want to look at is the RSI, which is very quickly approaching oversold levels. The reason this is happening rather quickly is because the sell-off was or is moving with strong momentum and volatility. If the market was dropping slowly, we wouldn't see the RSI react this way. As it stands, we need to see how the market reacts tomorrow at these levels. If we stagnate around this area, there's a higher chance of us moving lower in the second half of the week. Let's see if we break or stay at the 50-day moving average. The next downside area of support is at the 60-40 level, as we discussed last week. The Nasdaq, which is much stronger than the S&P, has substantially less downside pressure. One reason is because there's less pressure from the retail sector that's been weighing down the broad market, and less direct impact from interest rate fluctuations. The index is trading well above the 50-day moving average, so it does not look like large funds are going to be liquidating the tech stocks in the next few days. Although we could move down to the 35.50 level on the downside, I don't think we will be violating the 50-day moving average this downswing unless the broad market really breaks down. And I don't see that happening, not unless the midweek and end-of-week data from the Feds is extremely disappointing. Because the sell-off was not as dramatic as the one we saw in the S&P, the momentum was not very strong to the downside. We don't have excessive RSI readings. I would watch the broad market and see if we break the 50-day moving average with some force. If not, I anticipate a reasonable bounce in the tech sector at least till the mid part of the week. The only subsector I have strong reservations about right now is the semiconductors, which are below the 50-day moving average and look weaker than the rest of the tech sector. The subsector did not have the best of luck during earnings, and we have to watch it carefully because it can really pull down the Nasdaq sector due to the influence it has on other subsectors in the index. If we were to trade above the 50-day average, I would feel better about this sector, but for now we have to watch it carefully. The RSI is suggesting we're going to be range-bound for a while. If this sector remains neutral, it won't have much impact on the broad market one way or another. Most large tech stocks are done reporting, so let's see if we can bounce back to the low 38 level within the next few days. If not, we may be looking at support area near the low $36 level. Looking at the euro, it seems like we're at the intermediate term resistance level. While the RSI is not overbought at this level, I wasn't expecting to see it overdone because the rise was consistent and did not exhibit too much range expansion to the upside. I don't expect to see anything too radical or excessive volatility-wise around this area. Let's see if we could stay near the 134 level and how strongly and quickly we can begin moving down. Nothing fundamentally is telling me right now we're going to break this area to the upside. We know fundamentals are improving, but that's already priced into this market and has been for a few weeks. So we have to see something new to continue the momentum. Let's see if we could get it in the next few weeks, because if we don't, we will be heading down to the 132 area shortly. Let's take a look at the gold market. On a pure technical basis, the market is looking rather bullish. We saw a bullish crossover, which is when the 20-day moving average crosses the 50-day moving average on the way up. While everything technically looks stronger on a fundamental level and on a long-term technical level, we are still bearish. The long-term trend downwards has not been broken, and the only way gold can continue moving higher is if economy fails to improve. We know it's going to take some time, but it is happening. So if you're looking short term, gold may rally a bit, especially if the stock market looks weaker this week. But overall, I'm bearish and will only take trades to the downside in this market, unless I see the broad market trade below the 200-day moving average, which will demonstrate to me that the US economy is not improving. And I don't think we will see that because the Feds are still artificially keeping prices higher with the stimuli program. There's a new 4x4 setup to the upside. The ticker symbol is OCN, and you should place a buy stop at the 5190 level, and if filled, place a protective sell stop at the 4975 level. And if we don't fill this trade before lunchtime New York time, you should cancel this order. That's it for today. I hope you have a successful week ahead, and I'll update you tomorrow morning.